Hello guys, welcome back to Eric Mwenda Capital. Today we have opened up in our page, the YouTube page. You can scroll by these videos. Actually, by the time I'm done uploading all these training videos, I want a newbie to actually, when he enters my page and starts looking from these videos from the first one up to the current one, I want that newbie to actually to be conversant with almost all this lingo we have here. And so today we are going to learn about how to buy or sell commodities such as gold, specifically such as gold and oil, and also how to place your risk and reward ratio in accordance to your charts. We are going to learn about the history of the crude oil and the Brent oil, which originates from the Northern Sea in between Norway and the Northern Sea, in between Norway and another country there which I've forgotten. So let's get to it. I'm using tradingview.com and I'm trading gold. This is the symbol for gold. It may appear as gold as it is, but the other symbol is this. That's what it is. This is a CFD's contract futures different. Well, you're also going to look at it. You're going to look at how you might be able to trade the oil and also the gold. You're going also to look at the money management and also risk management. This is actually our previous company. Before we rebranded, we were actually called Bill and Shilling Forex. You used to find us at forex.billandshilling.com, but now we rebranded. We are Eric Mwenda Capital. So let's get to it. Remember guys, the first thing I said, once you wake up to the market, is check the economic calendar. Not only do you check the economic calendar, you also check the financial news. Okay, so let's start with the economic calendar, then we go to the financial news. This to Sunday 13. Let's back with have some good news. Seems like it's going to be positive for the Japanese yen. This is a Monday. So essentially what you are looking for is heavy volatile news. You can see it feels very good for the Australian dollar. Chinese yuan have industrial production, which is poised to rise. Average earning index bonus. It will also rise. This is the Great Britain pound, poised to rise. Normally I like to look at my economic calendar in a weekly basis so that nothing actually surprises me in terms of the calendar and big stats. Yes, the CPI, Consumer Price Index, poised to go down. That is for the Great Britain pound. German, this one will be good. German manufacturing PMI. So for this one, any figure above 50 is actually dictates that the manufacturing industry is actually doing well. Any figures below 50 show a decline in the manufacturing power. Purchasing Managers Index, that's what they call it. Germany Manufacturing Purchasing Managers Index. You can read here the German Manufacturing Purchasing Managers Index. PMI measures the activity level of purchasing managers in the manufacturing. A reading above 50 indicates that expansion in the sector, below indicates contraction. Traders watch these surveys closely as purchasing managers usually have early access to data about their company's performance, which can be a leading indicator of overall economic performance. A higher than expected reading should be taken as positive / bullish for the euro, while a lower than expected reading should be taken as negative. Yeah, that's also another good one. Let's continue. Composite PMI. Yeah, they also have one. The Great British Pound has one actually on Wednesday. Yeah. Sorry about that. Yeah, have some 10-year bond option coming up for the euro. Core retail sales. This is also another major one. Major one. It is poised to go down. So we expect the dollar also to go down with it. Yeah. So Wednesday, it seems that there are major news on Wednesday. Look at the interest rates. Look at the FOMC, which is the Federal Open Market Committee. Yeah, and the stated, and also the interest rate. Yeah, we had the interest rate decision for the euro last week, and well, there was not. It was expected to be maintained at 0.50, which it did. So I also expect the US dollar the Fed to maintain the interest rate decision at 0.25%. So I don't expect major movements here, but it's so good to be out of your trades during this time. You see, at 10 on Wednesday, but you cannot judge the market and then jump on after the rates have been announced. We also have a consumer price index for the euro, poised to remain the same. But let's wait and see. Building permits are increasing, so we would expect the dollar to also increase. But let's wait and see how that data pans out. So we are actually almost done with our economic calendar. Yeah, another thing I would like to look at, I'm gonna go to last week. The day of I'm going to go to 11th. There are some CFTC I'd like to look at. These ones. So these ones are for Friday 11th of December 2020. As you can see, copper positions remain the same. Great British Pound positions remain the same. Aluminium, actually, it's still on the buy orders, but the buy orders reduced from 6.2k to 0.1k. Let's look at gold. Gold remain the same, because actually most of these orders are remaining the same because there is a major decision which we are waiting today about the Brexit, which the EU gave an ultimatum to the UK of a no deal on Sunday. Yeah, so today is the last day of the Brexit negotiations between the EU and the UK. Yeah, today is 13th of December 2020. Today is the final day. Natural gas, the same. S&P 500, the same. It seems like people actually are anticipating this week's euro the same. So people are really anticipating for the markets to continue with the same trend for this day. So now that you're done with our economic calendar, we go now to our financial news. Astra plots post-COVID future with election deal. So what I really expect from this vaccine news and also stimulus news is that the dollar will weaken, because regardless of the corona cases in the US, I expect the dollar to actually lose its value, because it's now people don't regard it more as a safe haven. Look at that. Look at the coronavirus case. Normally, without the vaccine, if the cases would have reached this far, then we actually would expect the dollar to actually strengthen, because it's a safe haven. People move their money from elsewhere so that they can consolidate it on the dollar, because it's actually a safe haven. Yeah, but now since the vaccine is coming out, so the outlook on the dollar is weaker, because people are now seeing more optimism about the economic recovery. Yeah, so basically that's it. It seems that these guys are really getting more and more coronavirus cases, but anyway, it doesn't matter right now, because the vaccine, people are being vaccinated, so the general outlook of the economy is that it will recover regardless of what it's experiencing right now. Astra Japan may hold away subsidy campaign in Aussie. Also, we can see Korean cases upset. Yeah, so I just came and looked for the good financial news, or rather just to keep me in touch with the financial news. Also, there are talks about the stimulus packages both in Europe by the President Christine Lagarde, and also in the US. Yeah. So let's see. Yeah, vaccine data hits with 2.9 million doses petrol delivered. Yeah. So the US dollar might continue to weaken for this month, because also the courts just also Trump's legal cases. So Biden, also in the short term, Biden will also weaken the dollar. But I expect the dollar to regain its strength in mid-January, not at the end of January. Up then, I see a very weak dollar. Yeah. So I believe we are done with EU trade offer is unacceptable by government officials. So today will be a very interesting day. Let's see how whether the UK budges to EU demands, or we are not going to have that break. But anyway, when that Brexit happens, the British GDP will decline by 5%. Yeah. But if it doesn't happen, the general cost of products actually will rise by 8%. Yeah, so it's damned if you do, damned if you're not. Yeah, so I believe we are done. You can check out Alpha. I prefer Bloomberg for my financial. Yeah, so yeah, we're done with Bloomberg. We are also done with the economic calendar. So let's start with money management. First of all, before you trade, you need to know what leverage am I using, what lot size will I use, yeah, and is this commodity or is this asset class leveraged by the same leverage that I was given by this broker, yeah. So those are some of the questions you need to ask yourself. Some commodities like gold or oil are not actually leveraged at all in some brokers, and if they are leveraged at a it's a very low leverage. You might find that in currencies, you actually your leverage is 1:500, which is actually my favorite. I use 1:500. Anything more than that, I find actually as jokes. Yeah, but you can use whatever you feel comfortable is, but 1:500 for me works out well for me. Yeah, so brokers also offer a leverage of 1 also is to 2,000. I've seen brokers offer that. Forex offers that. I trade with them. And also I've seen also many deriv offer that. Even FXTM offer that, but for my accounts on FXTM I use 1:500, and for my accounts at Forex I use 1:2,000. But for some reason I'm using that to test my algorithm, my trading algorithm. So I need to use more leverage on that. Yeah. So you can see here an account size of $100. Yeah. An account size of $100. The maximum lot size you should use is actually 0.01. Only one trade of 0.01. Okay. And the allowable loss you should actually commit yourself to, I've written here 5%, but you can actually stretch it to 5 to 10%. Okay, I stretch it between 5 to 10%, but 5% is also so good if you can manage 5% maximum loss. Yeah, 5% would actually be $5. So in this you should allow, and for 0.01 to give you a negative $5, it means that that graph has actually fallen for a reason against your position by 50 pips. That's a lot. Yeah. $500 you can use a lot size of 0.05. so for this one you can actually split your trade into 0.01 or 0.02, and actually now place your first trade at 0.02, and then if the market goes in your direction you add another one, 0.02. If it continues to go in your direction you add another one of 0.01 instead of 0.05. 1000 0.1, which can be split in 0.5 0.5 twice. Yeah, I hope you know what I'm saying. And 0.5 for 5,000, $1 for 10,000, $3 for 30,000, $10 for 1,000. Remember, this method cannot be used with account sizes of an account. Yeah. So once you pass 100,000, personally, I use pass $100,000. I use 0.001%. Yeah, of my risk management. Yeah. So I hope this PDF are available at our website www.ericmondacapital.com at our downloads tab or at our products tab. You can find them there plus many other more. Yeah, it reminds me actually of the time we started. Yeah, we started as million sharing forex. Yeah, see that part one. Yeah, it's actually nostalgic. And now we are Eric Mondacapital. So let's get straight to gold. We are done with money management. Now let's get straight to gold. So with gold, I'm using tradingview.com. This is the symbol for gold, and I'm using the weekly time frame. I'll start with the weekly time frame and double down up to the 1 hour time frame. Yeah. So with gold, I'm going to use the Fibonacci. With gold, I'm going to use the Fibonacci. Yeah. So trading gold. I first of all on the weekly I identify my resistance, which is there, and my support, I can see it there. Yeah. I can change this to that. Yeah, so that's what we have. Now go to our daily. We have our support here and let's now use the Fibonacci retracement tool, and also in conjunction with the stochastic Yeah, what did we say about the overbought and oversold position? Yeah, but now let's wait on it. The fundamentals today might push it even higher, but let's wait on it instead of it going lower. Yeah, so that's some of the things you need to look out for. Yeah, so something like this. Fibonacci retracement tool. Here it is. Assuming after this candlestick had formed, I really wanted to get into this good trade. Yeah. After this candlestick had formed, I wanted to get this trade. What I have done. Basically, I would have waited 1, 2, 3, 4 days before I got into this trade, because within that 4 days, yeah, my graph would have touched my zones, which are in between here. You see, touched the zone, then went back down. So here was a very good point to get on that. Remember also the stochastic was going up, and there was more sell pressure, so it went back down. Yeah, it went back down. So I would have gotten here. I would have waited for 4 days. Gotten here. Remember, you use the daily time frame. Yeah. Also, let's look at this structure here. See where I would have gotten in. Let me look at another here. Actually, this one is a pretty good one. So with this one, I actually would have, let's plot that. And then we highlight our zones, which are between 0.618 and 0.382. Yeah. So for me to continue selling this, I would have waited 1, 2, 3, 4, 5 days. Yeah, 5 days for me to continue selling gold. Yeah. So my alternative would be to actually buy it, because I can see it was oversold. As I bought it, wait for it to hit my levels, which are here, which are denoted here by these yellow horizontal lines. You can see it made a false breakout, then it came down plummeting. Yeah, came down plummeting. Fell from $2,000 to $1,930. Yeah. So after this had ended, I would actually look at my stochastic. Is it oversold? Is it overbought? Then wait for it, because I saw it made also a deep dive, which would have misled people to think it's still going on a sale. Yeah. And also, after it has done that, I will actually wait for some few days, and then after it closed here, I would have put a buy actually now. Yeah. After it has closed here. See here? Or even here, this is also a good point to enter. Yeah, after it actually crossed the line, and then go with it up to this point. Remember what we said about the 50%. Remember what we said about the 50% level on the 50% level on the stochastic. It actually maintained that. If the graph maintains a 50% level and it's below the 50% on the stochastic, then it really means that trend it will actually go down. It will continue going down, provided that trend is actually maintained, continue to go down, which is the case here. Yeah. So a buy here, and also we short it using now the Fibonacci retracement, put it at our level. Yeah. So I would like us to look at oil now. It's the same procedure. oil with stochastic. Yeah, let's put oil it's not performing right now because there is not that much demand for oil. Yeah, and it actually goes with supply and demand. There you can see from this it was overbought, and when it came crashing down, it actually didn't give more pips as compared to this. When it was overbought here, yeah, it gave more pips. Yeah, so it works. It actually works a lot with supply and demand. So you have to be up to date with the financial news about oil. Yeah, about OPEC, that is Organization of Oil, Organization of Petroleum Exporting Countries, which is OPEC, plus Russia. Yeah, so we go to the daily. Yeah, personally I haven't traded oil since February. Yeah, I'm still looking at it until my demand levels are good. I'm not going to trade oil. Yeah. So it tells me it actually has been on the overbought position, but you look at the graph, it still continues to go up. So I would expect it to continue going up until it breaks down on the trend. So this is our support, this is our resistance, and we can see anytime it touches our support, our resistance since when? Since March, actually, before we had that negative price on oil futures, which actually guys confused with the true price of oil. That was the price of shale, which oil is actually, which oil comes from. Shale is a type of rock which crushed oil and processed. Yeah. So I'm looking for a good one. I would not advise you to trade oil if the structure has not really permitted. And for oil, very difficult. So let me look at with stochastic on this one. You can see here it formed a W on the stochastic, not necessarily, I believe, also on the yeah, a W there. Yeah, so we can see here when it hit our oversold position, the first time it went up, then it consolidated on this position here, our indicator. Fell down to form another point here on the oversold position, which was also consolidated, meaning that it was actually due for support. Yeah. Now something which I've forgotten about gold is our reward ratio, which I will talk about it in our part 3. Yeah. So don't forget to follow us on Eric Monda Capital at YouTube, at Instagram at Eric Monda Capital, at Facebook at Eric Monda Capital, and also at Twitter at eMonda Capital. Leave us a message on our website at www.ericmondacapital.com. So on our next video we'll talk about the reward ratio, yeah, which I've left out here. Going to exclusively talk about that. So cheers guys.